What's going on, everybody? It's Jeff here. Welcome back to the channel. 20% close, smashing above that $37 level of resistance, touching 48.20 intraday. Things are going to get interesting, especially as some of the hedging begins for a possibility of a gamma squeeze. I'm going to cover everything that you need to know. I also want to cover very quickly some of the stocks that we went over pre-market today because so many people in the group absolutely crushed it. Chinese regulations were a little bit relaxed. So all your Chinese companies, your Alibaba, your Baidu, your JD, even Neo had a little bit of action, absolutely crushed it today. There's another one I called out too, ran from 86 all the way to 104. Go over those briefly just because, like I said, so many people absolutely crushed it. And then we're going to talk about everything that is happening with AMC. So stick around. Let's get right into it. First off, look at this chart, this parabolic move. It was sitting at that little resistance of $38 intraday, broke above it, sit around 38.20, and then it absolutely just ripped to the upside. Cheers to that guy on the motorcycle, absolutely shredding by the office. If you look at some of the other ones, you look at GameStop, which falls. Look at this one, another rip as well. Even I think a few other ones. You look at BlackBerry, had a little bit of a parabolic, curve to it. I think Cost did as well. Not exactly similar, a little bit choppy there. I think Wish had another move. Once one of these began to gap up, I think GameStop started to peel a little bit first. Maybe I think GameStop started to peel a little bit first. Market makers just sent every single one of them. GameStop hitting 225. So let's go back to AMC. I want to just take a peek at the daily. We're going to cover a little bit of the plays that we talked about today in a second. Look at this, smashing above. Once we get above that 37, that 50-day moving average, we had a little bit at that 42. And then in the 40s and low 50s, we wouldn't spend a lot of time here. So it really becomes that blue ocean until we start to hit a little bit of resistance back up at the higher 50s to lower 60s range. Now, very quickly, want to cover some of the plays we had today. This was JD, which absolutely crushed it from the gap up, continued to run pretty much all day. Alibaba was another one, same thing, early morning, especially hitting 174. The last one, I think Neo had a little bit of love on it, and then FUTU, which is another Chinese-based stock. I called this one out a while ago, saying it was just absolutely hammered. You look at this, and when stocks like this are insanely oversold, these are the ones that you go after. You wait for that little bit of a bottom, you wait for a little bit of the curl, and these are the ones you go after. You don't always go have to be chasing the ones that are absolutely ripping. So these are the ones that I covered pre-market, and like I said, so many people crushed it. I wanted to come on and share it with you. If you're interested, come join the group. We'd love to have you. We talked about it, and everybody in the specific AMC chat we have was absolutely going bananas looking at this rip. So what I want to talk to you about today is what could lead to a gamma squeeze. We saw a lot of action, up 20% today, and an insane amount of options volume. Now, before I talk about some of the technical details of this, just in no way am I pushing options, am I influencing options, and I will explain everything much further. Be very careful. If you are not a professional or really experienced with options, you might want to be able to stay away from them. I can't tell anybody what to do, but you might want to be able to stay away from them. But let's take a look at exactly what happened. And first off, I'll tell you why you might want to stay away from them is because they've already ripped 100%. So at that point, you're gambling. And if I were you, if you're looking to take a gamble, I would probably go to the roulette table, play the bottom of the board, maybe throw $100 on 17. Because that's the swing you're going to be taking, and you could play 11 too. I like 11 or 17 are good swings on the roulette table. But more importantly, guys, the gamma squeeze, the hedging that could occur. So what had happened was, and I was saying this, okay, is all these weekly options. The strikes have changed. If you go to the monthlies, it's still the 50 cent to 145, but the weeklies have changed all the way down to a high strike of $80. And while the options volume has decreased, or I should say the open interest has decreased from before a little bit. As you can see, the volume's still high, the open interest. I do believe that is because a lot of retail have transferred over into just buying shares rather than trying to play the options, especially because it's Tuesday and they know how these market makers are. They let it rip a little bit. They kind of get you and then they yank it back and they literally just take your money. And if they've been doing this for 6 months and you're missing on the wrong side of this, trust me, these market makers are the ones that are making an absolutely killing off of this movement. But you can see the hedging that is going to start to need to happen, especially because we got all the way up to that $48 mark, especially because in the implied volatility has just increased as well. I mean, look at some of these numbers. We were, sub 200 around the at the money mark for a little while. So that has increased as well. And what's going to happen is these market makers are going to continue to have to buy shares in order to hedge their positions. Even if you look at on the put side, I mean, look at what's in the money for the puts. We've got next to nothing right here. So, there's not a little bit of volume, but look at that open interest, which is what's currently still held. There's not much happening. You look at where all of it was, because look at where we ripped from. You look where all the action was all the way from that 25 to that $37 mark. And if you go back up to on the inverse side, look at all this right here. Okay, there's a lot of volume on the $40 contract. It probably got absolutely smashed for anybody that day traded that today. Like I said, this was a today only play. Look at all these percentages of gains. Let's be realistic here. But what's going to happen is these market makers are going to continue to have to hedge for their positions, especially as they get closer towards expiration. We got some positive movement on these stocks going forward. Now, some of them have, you look at what's happened before. All right, and a lot of these large institutions, these hedge funds, these computer algorithms, they look for basically anything that's been a previous runner before. Has it been a runner on news before? If you look at if you're day traders day trading these biotech stocks, if it's already ran on news, it'll run on any news. Well, if you look at AMC and GameStop, I'm going to lump them together just for this one instance, is that they've been multi-day runners before. So we get one more solid push, especially like we had back in June when we had that 100% day. Think about this: we get a good 40% rip on the day. Even if it's an intraday, we don't even close. We get above to that $80 mark. That is going to cause for a lot of hedging that needs to happen in order for these market makers to stay delta neutral. And basically what they're doing is they're buying the shares to offset their risk. All right, their goal is to basically, the term delta neutral is to stay even. All right, and so if they have a lot of in the money contracts out there, basically it puts them at a massive risk. And when things can go sour, that's when these market makers can go underwater. So that's why they do what's called hedging is they do what's called hedging their position by buying shares in order to stay delta neutral. I hope that made sense for you guys. But that's what could cause a gamma squeeze by the buying pressure that comes in from us, the buying pressure that anybody that's jumping on FOMO, okay, as well as these market makers having to literally buy a massive amount of shares because all of these options are quickly running in the money. And even if you go out to the September 3rd date, there's still a good amount in the money. And it's the same thing. It's that $80 strike until you get, I think it's to the 17th, which is the monthly. And that's where it goes back to the 145. So that's what could lead to a gamma squeeze. It's exactly what happened, back in June, where the market makers really hammered on it. I've covered this before. The highest strike price was $40. We smashed through it. The next highest was $73. And we touched through that intraday. And that's what adds to a massive amount of buying pressure to really get that stock going up. Once the stock can go up, that's what happens first. It's a gamma squeeze that happens first, a parabolic move. That's when eventually these brokers will say to potentially anybody who's short in this position that, listen, there's too much risk out there. You're over leveraged. I need you to either raise capital or I'm going to need you to give back some of these shares because there's just not enough to go out. And that's that second part. But that first part is to be able to get that price up and get a little bit of a gamma squeeze to eventually get that next level. So all in all, massive day today. I said to you, I was excited for this week and we've still got 3 days left. So I'll see you in the next one.